So good afternoon, everyone, and thank you very much for joining us for our webinar this afternoon, where we're going to take a look at employment and tax issues that are coming up over the next few months for schools. My name is Christine Scott. I'm a partner and head of education team at Harrison Clark Rickabees, and I'm delighted because this is our third annual joint webinar with Crow, and it's going to follow, for those of you that have been before, a similar format, albeit online. So Amelia, if we can have the slides up, please, and I can go through the agenda for what we're going to look at today. Thank you. So in terms of our, what we're going to look at, we're going to start off with IR35. It feels like last year, doesn't it, when we were looking at this. It's back on the agenda, and I'm delighted that Caroline Harwood, who I'll introduce in a minute from Crow, is going to take us through that. We're then going to have an employment law update, and Rachel Parkin and Oliver Daniels in the team will be taking us through that, covering, of course, things like TPS, furlough, and holiday pay. Wouldn't be an employment update without it. We're then going to look at furlough and a tax update from Andy, and then finally representative occupiers, which is changes to living accommodation. There should be plenty of time for Q&A. So if you can look at the bottom of your screen, you probably all know this now. We should have plenty of time to go through questions. So please ask questions as we go. If we have time at the end of each speaker slot, we can ask some questions there. If not, we'll try and pick them up in the Q&A at the end. Any questions we do not get to, we will try and come back to you after the webinar if we can. So if I could now just introduce the speakers. Next slide, please. So I'm delighted today, as I've said, this is a joint webinar with Crow, to be joined by some familiar faces, no doubt, to some of you. Caroline Harwood, partner and head of share plans and employment tax at Crow. She's over 25 years experience advising on all aspects of employment taxes, not limited to IR35, also termination payments, benefits and advice on employment tax aspects of transactions. And some of you who have attended last year may well remember Caroline from that event. Also, I'm delighted that we're joined by Andy Hammond. Andy Hammond was also at our annual update last year. He's an employment tax director at Crow, over 28 years experience working in employment tax, and he started his career with HMRC, focusing on specialist employer compliance investigations. He's going to be talking about furlough today, which seems very appropriate. And finally from Crow, we have Robin Newman, who's an employment tax specialist with over 40 years experience. He is a qualified chartered tax advisor and was formerly an inspector of taxes. So I'm delighted that we've got some really strong, lots of years experience with us today. Next slide, please, Amelia. And finally, the HCR team. Obviously, I've introduced myself already. I'm lucky enough just to be chairing the event today, and I'm delighted that I'm joined by Rachel Parkin and Oliver Daniels, who most of you will know. Rachel and Ollie spend all of their time working with education clients and supporting them through all of the issues which have come up, particularly over the last 12 months, such as TPS, furlough, holiday pay, etc., etc. So I'm delighted that they are both here. Next slide, please. So let's get started. I'm delighted to hand over to Caroline, who's going to get us going with IR35. Over to you, Caroline.
Thank you, Chrissy. Good afternoon, everybody. This time last year, we were looking at IR35 as the hottest topic in employment taxes. So it was the thing of the moment. We were doing lots of presentations, lots of webinars, seminars, and producing lots of booklets and notes for IR35. And then everybody breathed a massive sigh of relief in March this year when it was deferred for a year because of the pandemic and the fact that nobody would be able to operate this and furlough and everything else all at the same time. But it is still on the agenda, and the start date is the 6th of April 2021. So now is the time to start planning again, dusting off those notes. And so I'm going to go through the key points that you need to be thinking about between now and April if you haven't started already. Next slide, please. So very quick reminder of what IR35 is. IR35 is the common name for the off-payroll working rules, which apply to any organisation which is not small, which employs, or that's a bad use of word, engages with an individual for their services through an intermediary. Now, at the moment, you don't need to worry about the tax other than VAT if you're doing that. But from the 6th of April, if you are a medium or large size organisation, you have to look at the relationship between yourself and the worker. And if it is in the nature of employment rather than self-employment, then you should be deducting income tax and national insurance at source if you are the person that pays the intermediary. Next slide, please. So what is the definition of small? How do you know if you're small? Well, if you're a company or a limited liability partnership, then for 2 consecutive years, if you meet 2 or more of the following criteria, you're not small. So that's having turnover of more than 10.2 million, balance sheet total more than 5.1 million, and an average of more than 50 employees. So you need to check that fairly regularly. If you are another type of entity, then you are small unless your turnover is more than 10.2 million for the last financial year, ending at least 9 months prior to the beginning of the tax year. And for these purposes, you need to look at a group as a whole, not just each company individually. I think otherwise you could split yourself up into bits and get out of the new legislation. The workers can ask you if you're small or not, so you need to have an up-to-date analysis of whether you fall within these tests. Next slide, please. So the next question, and the one that's missed quite often, is for IR35 to apply, there has to be an intermediary. If you are engaging directly with the worker, you already need to be checking whether their services are in the nature of an employment or not, and operating tax accordingly, and also employment law, but Chrissy and the team will talk about that separately. So what's an intermediary for these purposes? And actually, that's a really good question because it's changed over the last 12 months. Originally, an intermediary was basically somebody's personal company, a partnership, which they control and have more than 60% of the profits. And I won't read through the definitions. You've got them on the slides and you can refer to them later. That was changed at the beginning of this year because the government was worried that people would try and manipulate these definitions. But what they came up with was a definition that was so wide that it would bring all agencies, all umbrella companies, and any other corporate body in a chain of engagement into IR35. Now, that obviously raised the legislation way too wide-ranging and defeated the object where you have umbrella companies that are already operating PAY and national insurance. They don't need to do extra admin. So it will change back to the definitions that you've got on the screen in the spring before the legislation is put in place. We're told we're going back to the original definitions. Quite how they look in the legislation will probably be slightly different to what we saw before, but this is the essence of the test that you need to be applying. So your worker either has a company where they own or control more than 5% of the shares, or a partnership where they get more than 60% of the profits, or you are the main client of that partnership. Next slide, please. So I'm talking about the chain of engagement. Different parties in that chain have different responsibilities. If you engage the worker for their services, then you are the engager or the client. And those two terms are interchanged in the legislation, the regulations. They mean the same thing. They're the person who gets the services provided to them. And as the client, your responsibilities are to determine whether IR35 applies. So is that person really an employee? Is it someone who's sat in the IT department for the last 3 years, coming in at 9, going home at 5 and doing what they're told to do, in which case they're probably actually an employee? Or are they properly self-employed, like the window cleaner? And you need to take reasonable care making that decision. So you can't make a blanket assumption that every single person that you engage through an intermediary will be treated as an employee. That's not taking reasonable care. You need to give each person in the supply chain a status determination statement, so a statement of what tests you've done and what conclusion you've come to. And if the worker disputes your findings, then you have to respond within 45 days. The next party in the chain is the fee payer, so the person that pays the intermediary. Now, that may or may not be the same person as the client. You may have an agency in the chain before the intermediary, before the worker. And it's the responsibility of the fee payer to deduct tax and national insurance and to pay that together with the apprenticeship levy to HMRC. And I'll tell you how you calculate that later. So next slide, please. So in preparing the status determination statement, the end client needs to look at the employment status indicators. And there's a diagram on your slides there which sets out various badges or status indicators which help you to determine whether the individual is in business on their own account. Do they run their own business and you just happen to be one of many of their clients? Or are they really, in essence, your employee? I'm not going to go through all the tests. I did that last year. So those who came will have gone through that both with me and with the Harrison Clark Rickaby's team, who explained the position very, very clearly. If you have any questions, do come back to either me or Chrissy or Rachel or Ollie, and we'd all be very happy to discuss it with you. You use the indicators to determine whether the individual will be an employee if contracted directly. Now, if you use HMRC's Check Employment Status for Tax tool, it's a really good starting point. If you complete it fully and accurately, HMRC stand by its results, and it will come out either with status inside IR35, so you deduct tax and national insurance, outside, so the person is self-employed, or far too often, undetermined, when you need to look into more detail. You might need to have a chat with Chrissy and her team. It won't give you an answer in all circumstances, as I say. So next slide, please. So if the rules apply, what are the consequences for you if you are the fee payer? And as I've said, you need to deduct PAY and national insurance, you need to deduct VAT, and you need to look at issues such as costs of materials and so on. You do that through the payroll. What you don't have are any employment law obligations which would apply to an employee. So no statutory sick pay, maternity pay, no redundancy, no holiday, no pensions, and no national minimum wage or national living wage responsibilities. Next slide, please. So are you the fee payer? It's really quite important. It's the lowest party in the chain that pays the intermediary. They must be resident in the UK or have a place of business in the UK. So if they're offshore, then these rules won't apply. They must pay the intermediary controlled by the worker or an associate of the worker, and they must not be controlled themselves by the worker. So it's a third party. The client or agency above the fee payer provides the status determination statement, as I mentioned. And if you as the fee payer are not also the client and you don't get a status determination statement, you make your payments gross of income tax and national insurance. But there is an obligation on you to check. So ask the client if they've made the status determination statement and ask them for a copy. And then if you don't get it, operate not net, until you get a status determination statement. Next slide, please. Once, as a client, you've done your status determination statement, you pass it to all the workers in the chain. If you don't, the workers' tax and national insurance contributions are your responsibility. You need to take reasonable care, as I mentioned above. You are liable for tax and national insurance contributions until you have communicated the status determination statement to everybody else. And you need to have a dispute resolution process in place in case anybody disagrees. So you know when that 45-day clock starts ticking, and that's when you have received any notification of objection. Next slide, please. So the worker or fee payer can make representations to you. You need to review the reasons for the disagreement and any additional information they might give you. So they might give you lists of other clients that they work for, or they might tell you about people who work for them so that you can understand better whether or not they have their own business. You then decide whether you were right or not. And if you were right, you explain why. If you think the additional information means that you're actually wrong and you've changed your mind, they are now self-employed, you give a new status determination statement. Keep records and of your determinations and your reasons. Respond within 45 days. Tell the worker if the determination hasn't changed. tell the fee payer and the worker if it has, because it means the fee payer will have to do something different, so it's good for them to know. If you don't respond in the time limit, the tax and national insurance is your responsibility. Next slide, please. So if you're the fee payer, you calculate what's called the deemed direct payment and you operate PAYE and national insurance on that. You also pay employers' national insurance. You need to make a real-time information report to HMRC, and you apply the apprenticeship levy and make full payments that are necessary under the different contributions, levies and taxes. You cannot use the employment allowance against payments to deemed employees. So if you're eligible for the employment allowance, you don't put it against your IR35 individuals. Next slide, please. So how do you calculate the deemed direct payment? It's quite complicated. I'm not going to go through it in detail. It's here on the slide, but basically you deduct VAT and the expenses that you would allow if the worker was your employee. You use your normal payroll software to determine what tax and national insurance is due, and you make your payment through a full payment submission. You can put them on your existing payroll, but if you think that's going to be complicated, set up a separate one, keep all your records for at least 6 years and correct errors in the normal way. Next slide, please. The final step is to make sure you secure your labour chain. If the fee payer fails to operate PAYE, HMRC can look up the labour chain to the client and collect PAYE and national insurance from you. So you need to make sure that you are protected from potential liabilities. So speak to your lawyers, have a chat with Harris & Clark Rickaby's, and make sure that your contracts have enough indemnities in them to cover yourself should another party in the chain fail to operate their obligations with regard to PAYE and national insurance. Normally, they will not seek to do it if the failure was genuine business failure, which is difficult for you to protect yourselves against. But if they have knowingly benefited as a result of winding up without paying tax, you, as the client, end up footing the bill. We're going to have more guidance on this at some point. So next slide, please. So that was a gallop through IR35, and I'm now going to hand you back to Chrissy to introduce the legal section of the webinar this morning. This afternoon.
Thank you very much, Caroline. That was really informative. Caroline, can I just ask, before we move on to the employment update, for those in relation to the intermediary change that you mentioned, for those schools that conducted this exercise, is there a lot of work in re-looking at that now? Do you think?
No, there shouldn't be. No, I mean, if the exercise was undertaken on the basis of the original legislation, then it will be reinstated. So they shouldn't actually have to do anything. If there is any particular difference, we will put out an update to this distribution list so everybody knows that there is something different. But we are assured that we will be going back to the original version of the legislation, which is good news.
That is helpful. Thank you. It's been a good news. Yeah, that is good. Thank you very much, Caroline. I'm sure there'll be questions at the end. Please do pop them in the Q&A box if you do have any. We've had one person asking, are these slides going to be available? Yes, they are. So you will all be sent the slides after this event, and we will also be publishing this as a recording. So you'll be able to download it and share it with colleagues or watch it again. If you wish to do so. So without further ado, I'm going to hand over now to Rachel Park, who's a partner in our employment education team. She needs no introduction, really. She's done lots of these this year. Rach, over to you.
Thanks, Chrissy. Amelia, could we have the first slide, please? So Oliver and I are going to spend the next half an hour or so discussing some important developments impacting schools from an employment law perspective. We're going to focus on the 4 key areas on the slide. So I'm going to start by looking at the extension to the coronavirus job retention scheme and considering the question about furloughing staff during the Christmas holidays, which has come up quite a lot recently. I'm then going to briefly look at working from home from an employment perspective. And then Oliver's going to give you an update on where we are with the Harpur Trust and Brazel case. So a case relating to the calculation of holiday pay, with which I'm sure you're all very familiar. Finally, we couldn't have a legal update at the moment without at least mentioning the TPS. So moving on to my first slide. Last month, the Chancellor announced that the coronavirus job retention scheme was to be extended until March next year. More guidance on the scheme and a further Treasury direction, I think it was number 5, was published a few days later. As we all know, the scheme is designed to support employers whose operations have been severely affected by coronavirus. Independent schools can access the scheme, although the government has said in its guidance that it expects to see the level of claims from independent schools decrease with pupils obviously returning and schools fully open. It does remain the case that schools generally who receive public funding, such as academies, maintained schools, are generally unable to furlough staff and access the scheme. Unless, of course, you can demonstrate that some specific funding has been withdrawn and that funding was directly linked to salary costs for a particular staff member. So I have had a few clients who've been able to access the scheme because of events. So people who've been working in the field of events, they've been able to attribute their salary to the lack of income because those events have not been put on. Until the end of January, the government's going to pay up to 80% of an employee's normal pay for hours not worked. There is the cap again of £2,500 per month. Employers are going to be responsible for national insurance contributions, employers' national insurance and pension contributions, and can top up if you want to, up to 100% above the scheme at your own expense. The scheme is going to be looked at again in January 21 to decide whether economic circumstances have improved enough to ask employers to contribute to the wage costs of furloughed staff. So that was the case in September and October. Employers have the ability to fully furlough staff, so that's where the employee won't do any work for their employer during the period of furlough, or you can use flexi-furlough, flexible furlough, an arrangement where an employee can work for any amount of time or any shift pattern, and that can actually vary from week to week by agreement. Employees can, although they don't have to, be furloughed if they are staying at home in line with public health guidance, so clinically extremely vulnerable members of staff, or if they actually need to stay at home with someone who is clinically extremely vulnerable, you could consider furloughing them in those circumstances. Similarly, you could think about it for employees with caring responsibilities, and that could include people who have to take time off to look after children. Interestingly, employees that were employed and on payroll on the 23rd of September, who were made redundant or stopped working for their employer after that date, can be re-employed and claimed for under the extended scheme. There are, of course, other issues that you want to think about when you're deciding whether or not to do this. So you'll need to think about, for example, the effect that that continuity of employment might have on any redundancy pay, or indeed on unfair dismissal protection. As was the case with the previous scheme, when furloughed employees can't perform any work for their employer that generates any income, but they can volunteer and they can work for other employers, assuming their contract allows them to do so. You will need to discuss the proposed furlough arrangements with staff and confirm it in writing with each employee that they've been furloughed or flexibly furloughed. And we would recommend that you obtain the written agreement of those employees to the proposed change, because it is a change to their contractual terms and conditions, even though the guidance itself doesn't actually explicitly require this. Since yesterday, so since the 1st of December, employees aren't able to claim for any days that an employee spends on notice in December or January. And the other important change that came in yesterday as well is that now HMRC are actually publishing the names of companies that have made claims under the scheme for the month of December onwards, and also a reasonable indication of the amount claimed. So this wasn't actually a feature of the original scheme, but they have brought it in apparently to it's as part of their commitment to for transparency and also to deter fraudulent claims. The 5th direction also makes it clear that it is actually a condition of the extended scheme that if you submit a claim, you are signing up to your names and details being published. So moving on to my next slide. Now that the scheme has been extended to the end of March, we are being asked quite a lot whether a school can furlough staff, including teachers, over the Christmas holiday period. Well, it's our view that in some limited circumstances, it may be possible to furlough staff during the Christmas holidays, but you need to be aware of the risks before deciding whether or not to do so. And in most cases, we consider it's unlikely to be within the spirit of the scheme to utilise it in this way. I mean, any decision will need to be taken on a case-by-case basis, taking into account the school's particular specific financial circumstances and also the contractual position of staff. You might be considering furloughing staff during the Christmas holidays as a means of saving costs and reducing the prospect of future salary cuts, redundancies, pay freezes, and therefore where you are considering those sorts of cost-saving measures, then you might be able to support a justification for accessing the scheme in this way, so where you have seen a significant reduction in income. In terms of the contractual position of staff, so for all staff, including teachers, if their contract of employment expressly states that all school holidays are indeed holiday, as opposed to an employee not usually being required to work, then it may not be possible to furlough staff in that situation. For teaching staff, schools should consider what, if any, work a teacher might be required to do during the Christmas break. So in contrast to perhaps the summer holidays, where teachers may do a little bit of work here and there, Christmas does tend to be a period during which the school tends to shut down. So it's likely that a teacher wouldn't normally be required to work too much over the Christmas period, and the school wouldn't have work for them to carry out. The latest Treasury direction makes it clear that while an employee is furloughed, the employee must be instructed to cease all work in relation to their employment, and that instruction should be given by reason of circumstances arising as a result of coronavirus. So similar to the previous position. And that obligation not to work is unlikely in most cases to be as a result of the virus, but would simply reflect the school's usual requirements at this time of year. Of course, if evidence exists to demonstrate that actually staff often work during the Christmas holiday periods, then it's likely to be very helpful from a furlough perspective. Similarly, school staff who work term time only do not usually designate holidays as a holiday from work, but these are instead non-working weeks rather than annual holiday. So there's no specific information in the latest guidance on whether a member of staff has to actually be at work in order to be furloughed. But it's difficult to see how a school could justify furloughing a term time only member of staff when she or he wouldn't actually usually be required to carry out work during this period. For year-round staff, of course, the situation may be different. Once again, the terms of their employment contract will be key. But of course, if you have got an all year round staff member who may do work over the Christmas holidays, office staff, for example, then you might be able to furlough them if there is no work for them to do during this period. That said, if they have nominated any time as annual leave, then they wouldn't be able to, they shouldn't be placed on furlough because the guidance is very clear on that. Irrespective of the contractual position of staff, if you've got staff members who are already on furlough, so if you've got clinically extremely vulnerable members of staff who you've decided to furlough and they're not able to work from home, then obviously it's more likely that the school will be able to justify the continuing use of the scheme for those individuals during the school holiday period. Now, there was a funny reference in the latest guidance to supply teachers. And the guidance makes reference to supply teachers specifically and says that they can actually use the scheme in the same way as other employees and can continue to be claimed for during school holiday periods, provided that they meet eligibility criteria. So this specific reference to the scheme and school holiday periods has resulted in, of course, some confusion when considering the question we've just been discussing. Now, having looked into it a bit more, I understand that the specific guidance in relation to supply teachers was introduced because supply teachers were understandably unable to obtain opportunities over the last few months, or less opportunities, I should say, because schools are obviously expected to minimise social contact through the use of bubbles as a result of the virus. And also I understand that the government came under some pressure from the unions because they seemed to slip through the net a bit, and many supply teachers were actually denied access to the scheme. So it's my view that really that additional paragraph doesn't assist a school particularly when assessing whether to furlough staff generally during the Christmas holidays, save of course if you've got any supply teachers that you directly engage. And the issues that we've been discussing and considerations remain the same. Next slide, please. Of course, as we know, accessing the scheme in any circumstances is not without risk. If a school is faced with difficulties in maintaining its workforce because it's been severely affected, as I say, then we consider it could be acceptable for the school to furlough staff. Similarly, where staff are already furloughed, the risks associated with continuing to furlough them during the holidays are likely to be lower. But the risk remains that HMRC may consider that schools shouldn't furlough staff if they are not required to be at work. And we don't yet know how HMRC are going to approach this, but we do know that some schools have already been contacted by HMRC about their furlough claims. And of course, the other thing to think about is, as I've mentioned from yesterday, details of companies and a reasonable indication of the amount claimed under the scheme are now being published. So of course, there are the reputational issues to consider as well before deciding what to do. Next slide, please. So finally, I'm going to look briefly at working from home from an employment perspective. I know my colleagues are going to look at it from a tax perspective. So although schools are now fully open, there remain some staff, probably not too many, but some staff who are working from home, whether because they're shielding, self-isolating, or because their job allows them to do so, so office staff. Ideally, if you haven't already done so, you should think about reviewing home working practices in light of the continually changing, it seems, guidance. And in the longer term, you might want to have a look at home working policies if you've not got one, and obviously your home working arrangements on a more formal basis. It's important to note that regardless of working location, employers have a duty of care to employees. And it means really that employers have an obligation to ensure that their employees are not at risk whilst at work, and must take reasonable steps to ensure an employee's health, safety and well-being. And this includes working from home. So the HSC, the UK's workplace health and safety regulator, has updated its home working guidance to take account of working arrangements during the pandemic. And ACAS has also published some quite useful guidance on working from home. And that sets out that employers and employees should really be practical, flexible and sensitive to each other's situation when working from home. One question we are often asked about is whether employers need to carry out a risk assessment for those working at home. Well, the short answer is yes, but the exact nature of the assessment will depend on the type of work which is being undertaken at home. So at the very least, you ought to undertake a basic home working risk assessment and consider whether there are any risks which arise from the type of work being done at home, whether it can be done safely, and whether any measures ought to be introduced to protect the employee from any risks identified. So for employees who are largely computer-based, telephone-based, then the risks are likely to include physical issues from prolonged use of screens, working long hours, inadequate breaks from work, perhaps feelings of isolation, lack of supervision in some cases. So you'll need to think about whether you can implement any measures to minimise the impact of those risks. So practical tips, just perhaps check in on the employee, make sure that they feel that what they're being asked to do, they can do safely and effectively, keep in touch with people, particularly people on their own, and ensure regular contact with those. Establish clear expectations on both sides in relation to working hours, availability, communication, that sort of thing. And also make sure that employees know that there are avenues to report mental well-being issues and perhaps schedule those regular check-ins. There's no general legal obligation on employers to provide equipment necessary for home working. In the guidance issued during the first lockdown, the government encouraged employers to take every step possible to facilitate employees working from home, including providing suitable IT equipment to enable the remote working. Some employers have developed systems to allow employees to take things home from the office. I know we had somebody wheeling their chair down the road just in the shorter term. And some employers are providing a budget to employees to buy necessary equipment. You need to just be flexible and obviously think about those where there is a risk, perhaps looking at funding the equipment for those individuals. And of course, disabled employees may be entitled to auxiliary aids, and that if an aid is necessary, then you'll need to fund that at your expense. Confidentiality, the normal duties apply. So the normal duties to protect confidential information apply even when employees are working from home. So you should remind your employees of that and the importance of that, because obviously it's much more difficult to ensure confidentiality when employees are working from home. You can't control who's in the house and everything else. As I've mentioned, you might want to consider a home working policy or as a minimum, a sort of home working guidance document, which sort of sets out expectations for staff working from home, and clear guidelines, as I've said, regarding communication. So think about all those things when thinking about developing those guidance and those practices for those employees at home. I'm now going to hand you over to Oliver to talk to you about holiday pay.
Thanks, Rachel, and good afternoon, everyone. So as Christine said at the outset, it wouldn't be an employment update without at least mentioning the topic of holiday pay, and I'm going to provide a brief update now on where we are with the Court of Appeal's decision last year in the case of the Harpur Trust versus Brazel. Now, you might recall that the decision related to the calculation of holiday pay for staff who work part of the year. So that's anyone within your schools who doesn't work year round, all of your term time only staff, and also staff who work for very short defined periods in the year. The key issue in the case was whether holiday for a worker working for part of the year, in this case a visiting music teacher working variable hours and term time only, could lawfully have their holiday pay entitlement prorated based on the weeks of the year in which they work. The decision went through the employment tribunals and up to the Court of Appeal last year, and the Court of Appeal held in the claimant Mrs. Brazel's favour. And in doing so, they made it clear that for part-year workers, it's unlawful to prorate their holiday pay entitlement based on part of the weeks of the year in which they work, and that they should be entitled to at least the statutory minimum 5.6 weeks holiday entitlement in the same way as their counterparts working year round. The result of that is that Mrs. Brazel and other part-year workers end up with an enhanced holiday entitlement in comparison to their colleagues working year round. And the decision has particular implications for schools, many of which have commonly used the same or similar holiday pay calculations to the Harpur Trust when dealing with 0 hours peripatetic staff with variable working hours. So in the case, the Harpur Trust paid holiday pay in 3 instalments at the end of each term based on a multiplier of 12.07%. And the Court of Appeal deemed that to be unlawful. And that exposes a number of schools to the potential risk of liability in terms of backdated unpaid holiday pay. The decision also has knock-on implications for other categories of staff in terms of, for example, the calculation of holiday pay for term time only staff generally, or for those who might work for very short defined periods in the year if they're engaged on permanent contracts. So for example, exam invigilators or sports coaches. And in those circumstances, we may find that there are windfall situations in terms of holiday pay entitlement as a result of this decision. So in terms of where we are with this case, the Harpur Trust sought permission to appeal the Court of Appeal's decision to the Supreme Court, and we've now had confirmation that that permission has been granted. So we will have an appeal hearing at the Supreme Court, which will be the definitive judgment on this case. We're going to have to wait some time for clarity on this issue, however, because the hearing has been listed for the 9th of November 2021. So I'm afraid we'll still be talking about Brazel this time next year. There remains, however, a possibility that the Court of Appeal decision could be overturned, and the general principle of prorating holiday pay for part-year workers could be deemed lawful. So on that basis, our advice to schools generally is to hold off on making advantageous changes to holiday pay arrangements in the light of the Court of Appeal decision, given we have a pending appeal to the Supreme Court. What remains important, however, is for schools to audit their current practices and understand to what extent there could be a potential liability as a result of the Court of Appeal decision. And as far as you can, quantifying what that liability may be. Because of course, the Supreme Court could equally uphold the Court of Appeal decision, and at that point, schools are going to have to consider to what extent they address any liability that they may have. So a case that many schools will be keeping an eye on, and of course we'll keep you updated as to the development of the appeal. Okay, next slide, please. So just to finish off the employment law section of this afternoon's seminar, just a brief note on the teachers' pension scheme. I'm aware that there are a number of academy schools with us today, and clearly this is a relevant issue for independent schools where participation in the TPS is optional, but hopefully it's nevertheless of interest to the academy school delegates amongst us as well. This really remains a key issue for the independent sector, and that's only been enhanced by the impact of COVID-19. Prior to March, there were a category of schools that were perhaps in the position where they were waiting to see in terms of making decisions around TPS and how to address the cost associated with it. In particular, awaiting a response from the government to the consultation on the possible option of a phased withdrawal, otherwise known as a mixed economy approach, which we'll come to in a bit more detail shortly. It's clear, as with everything, COVID-19 has drastically changed the landscape, and many of those schools have had to reconsider their position and think again. We're seeing more schools considering their options in relation to TPS, with a number of consultations over withdrawals from TPS commencing since September. In terms of the current numbers, we have from the Independent Schools Bursars Association, as at the end of October, there were 190 schools who had left the Teachers' Pension Scheme or given notice to do so. There were 148 who've joined the Aviva Aptis scheme as an alternative to the TPS, and a further 98 are in discussions to do so. So it's clear from those numbers that TPS is very much at the top of the agenda in terms of financial risk for the independent sector. And in a further development, last month, we at last had the government's response to the consultation on the proposal to allow independent schools to phase a withdrawal from the TPS, otherwise known as the mixed economy approach. Now, that consultation was launched in September last year to offer independent schools an option whereby they could opt out of TPS participation for future staff, whilst allowing existing staff to remain as active members in the scheme, an option that's not currently available under the current version of the TPS regulations. The consultation prompted a great deal of response. There were over 600 responses to the government consultation, the majority of which were very supportive of the proposal. And in summary, the response confirms that this will become an option that's available to independent schools as an alternative to fully withdrawing from the Teachers' Pension Scheme. It will require a change in the law, so there'll need to be an amendment to the TPS regulations. The intention is, however, that the option will become available to independent schools as early as spring 2021. So to what extent is this going to be of benefit to schools that are considering their options in relation to TPS or are actively engaged in consultation over this issue with staff? Well, in simple terms, it simply creates another option that independent schools can now consider in terms of addressing the TPS risk. And it has, of course, the clear benefit that it avoids the need for a potentially difficult consultation with your existing staff. But clearly it's not a one-size-fits-all solution to the problem. It's acknowledged within the response that if you implement a phased withdrawal, you're unlikely to see any benefit within the first year of implementation. And after that, the benefit will be gradual in terms of it relying on existing staff leaving and new staff joining the school. There may also be a number of other potential drawbacks to the phased withdrawal option. It may well reduce already low levels of staff turnover within the sector, where you have staff unwilling to move on because they may risk the protection that they get in terms of their TPS participation. And perhaps fundamentally, it doesn't fully address the very real risk of future increases in TPS employer contributions come April 2023. So the extent to which this presents a viable way forward for schools will vary from school to school, depending on the specific financial circumstances and the school's priorities. And it's perfectly legitimate for a school to reach the conclusion that this doesn't present a viable way forward for some of the reasons we've discussed. What's important, however, is that those schools that are considering their options in terms of the teachers' pension scheme factor into their decision-making and their business case a consideration as to whether this is an option that is viable or not. So if you're a school that is considering options around TPS but not actively engaged in consultation, you should be including this now within your strategic thinking when you're compiling your proposals and your business case. And you may legitimately reach the conclusion that it doesn't present a viable way forward, but you need to be documenting that thought process. And it may be helpful to preempt the issue with your staff as you enter into consultation over a withdrawal from the TPS, either by addressing it within your business case or in a separate document, for example, an FAQ that can go to staff. If, however, you're a school that is actively engaged in consultation with staff over a proposed withdrawal from the TPS, this option doesn't necessarily undermine your pre-existing business case for withdrawal. But again, it's important that you review the position and your business case in light of this development. Ask yourself, does it change the position? Does it change in any way your proposals? And if not, what's your business justification for that? And documenting your thought process will be really important. So you might want to think about creating a short addendum to your existing business case that can show and demonstrate that you've considered this development. And again, it may be helpful to preempt the issue with your staff representatives, perhaps by adding it as an agenda item to your next meeting, or even writing to the representatives to explain that you've considered this new development and this is the position you're taking on it, subject, of course, to the ongoing discussions and consultation. It can really help to control the narrative in taking a proactive approach. So in summary, I think this should be welcomed in presenting another option for independent schools in addressing the TPS risk. But as always, the devil will be in the detail, and we'll wait to see what draft amendments are proposed to the TPS regulations. And of course, we'll keep you updated as we get further clarity on that. So that's a brief summary of some of the key issues we're advising schools on from a staffing perspective. Rachel and I will be around later for the Q&A, so happy to take any questions. But for now, back over to Christine.
Thank you very much, Ollie, and thank you to Rachel also for a fascinating run through an employment update. Certainly a lot going on. It's never dull in the area of employment law. And as Ollie has said, we've had a number of questions already on the topics we've already covered. Please keep those coming in and we'll pick them up at the panel session at the end. For now, I'm delighted to hand over to Andy Hammam, who's going to talk about furlough. Over to you, Andy.
Thanks, Chrissy. Good afternoon, everyone. Yes, I'm going to talk about the Coronavirus Job Retention Scheme, CJRS. There will be some crossover with some points that Rachel raised, but obviously I'm addressing it from a employment tax point of view. So can I have the next slide, please? Okay, so for the purposes of this presentation, we've got what we've classed as version 1 and version 2 of the CJRS. So the first version that hopefully most of you will have met and come across started way back in March of this year, and initially provided wage subsidies of 80% with a cap of £2,500 per month, and it also provided the associated employers' national insurance and pension contributions. So that was the effective grant that an employer could claim from the government. The scheme actually closed, the version 1 scheme closed to any new entrants on the 30th of June. So that was sort of the first real change to the scheme. And then if you look into the table below, you can see that further changes arose. So July, nothing really happened, and then August was the first major change, in so much that the government stopped the grant for employers' national insurance and pension contributions. So the employer could still claim 80% of the wages, salaries, but had to now fund the employer's NI and pension contributions. And then into September and October, the actual grant reduced 70%, then 60%, but the employer still had to pay a minimum of 80%. So as you can see there, they had a further cost of making up the difference, so the 10% and the 20%, plus the employer's NI and pension contributions. And then the scheme originally was and still did close on the 31st of October, and at that point, that was going to be the end of it. But as I'm sure you're aware, the government did extend it into version 2. Can I have the next slide, please? So we had the announcement that from the 1st of November, there would be an extension. Initially, the announcement just said that this would just be for 1 month, and that would be to effectively match the lockdown that we've only just come out of. But soon after, literally a matter of less than a week, the government extended it and committed to running the version 2 scheme through to March next year. That said, they will be undertaking a review in January, which we suspect will be looking at whether they start to reduce the percentage of the grant. As Rachel alluded to, HMRC will publish, or have said they will publish now, names of employers that claimed under the new version 2 scheme, an indicative value of the claim, company registration number. So that'll be anything from December onwards, that there will be, we suspect, a new web page that'll carry that information. In terms of what you can claim under version 2, it's actually almost an exact mirror of August under the old scheme. So they can claim, an employer can claim 80% of the wages. They can't claim national insurance or pension contributions. That's something they've got to incur themselves. And in the same way as flexible furlough, employees can effectively come and go as is needed. And when they do work, they have to be paid 100% of their wages. So it's exactly the same as August was under the old scheme. Employees that can be furloughed, so it is open to employees that were on a contract of employment on the 30th of October, and also that had been included on an RTI submission to HMRC between March and October. If they were on a fixed term appointment or have been made redundant, then they must have been on an RTI submission on the 23rd of September. The good thing is that there is actually no requirement that they needed to have been part of the version 1 CJRS. So if they didn't qualify for any reason before, or they're newly employed, as long as they met the criteria of the dates that I just mentioned, they could be included or can now be included in the version 2 scheme. Next slide, please. So calculations for the claims follow exactly the same methodology as the old scheme. So if they were previously furloughed, then their reference pay, which is basically the key monetary figure that the claims are calculated from, that remains the same as before. So if they were under the old scheme, that would be their salary on the 28th of February, or if they were if they were variably paid, then we would compare their salary in the previous tax year. But if they're new to the scheme, then for fixed salaries, then it's the amounts they were paid on and before the 30th of October, so typically would be their September payroll salary. Or if they're variable paid, then it's the pay between either the 6th of April or their employment start date if later, and the 1st of November 2020. Again, claims would be reduced for any periods that they're not on furlough, or if they're working under a flexible furlough arrangement. The key difference to version 2 scheme is that claims cannot straddle 2 calendar months. Some employers, depending on how their payroll was set up, might have put in a claim that crossed over months. Claims now must stick to strictly to calendar months. Claims have got to be for a minimum of 7 days. So employees can come and go as frequently as they wish under flexible arrangements, but the actual claim must be for a minimum period of 7 days. Having said that, all claims must be submitted by the 14th day following the month end. So for November, 14th of December, December, 14th of January, and so on. So it's a very strict deadline. If you notice that you've underclaimed, you can make an amendment, but you only have 28 days from the end of the month to do that. And if you have overclaimed for any reason, that can be amended by setting it off against any future claims. Next slide, please. So the job support scheme, if I could have the next slide. Thank you. So the job support scheme was meant to come in when the first version of the CJRS ended, and that had 2 versions of it. It was the JSS Open and JSS Closed, and as you can see, each one had a slight difference in the amount that could be claimed. So the JSS Open, employees had to work at least 20% of their normal hours, and the employer could claim 61.67% of their wage costs for any hours not worked, with again a cap similar to CJRS. And JSS Closed, which is businesses basically that are in the tier 3 category, so were forced to close their businesses, they could claim 66.67% of employee wages, again with a cap. But as I'm sure you're aware, with the extension to CJRS, the version 2 CJRS, the JSS naturally fell away. At this point, will it continue after the current CJRS ends in March? We don't know. We would expect it possibly would, but obviously we'll wait for full confirmation of that, probably sort of February, early March time. Next slide, please. So the job retention bonus, similar message, unfortunately. So this was, again, a further grant of £1,000 for every employee that had been furloughed under the version 1 scheme, as long as the employer kept them employed between November and January next year, they could claim this £1,000. Again, with the extension of the CJRS, this scheme was effectively cancelled. And again, as I mentioned, similar sort of message. We don't know if there'll be something to follow CJRS version 2. Further details should follow. Next slide, please. Okay, so this is something that certainly in the field of tax we find really, I was going to say interesting, but it's something that all employers should be aware of if they've made claims, not to be taken lightly. The numbers that were claimed, so the monetary amounts paid out by HMRC are quite staggering, and I'm sure you've all read in the press of how it's affected the economy. So just some headline numbers there. So 9.6 million employees were furloughed as of August, and 1.16 million employers were claiming under the CJRS version 1, with the total payout of a staggering 3.5 billion. As you might expect, HMRC, because it was very much a pay now or pay then, check later, we're into the check later territory now. So they have written out and are still writing out to certain employers. What we're finding is a very standard stock letter, which we call a nudge letter, which is basically saying to employers, we think you might have made an error. It doesn't tell you why they think you made an error, but it invites you, encourages you, shall I say, to go through your claims and check for accuracy. And if you do find an error, then you are required to notify HMRC. There was an amnesty. It ended on the 20th of October. That was where employers could check themselves and, if necessary, correct and repay overpayments. Obviously, that's passed. We would still encourage any employer to undertake that check proactively and to correct any errors. As with anything with HMRC, better to discover it yourself and voluntarily disclose it than HMRC come inquiring and finding it. The key here is if HMRC do discover that you have overclaimed, they can charge a penalty of up to 100% of the amount owed. So obviously for many employers that could be a significant number. Next slide, please. Okay, so just very quickly through working from home. So we've all been working from home for coming up nearly a year, believe it or not. HMRC do allow for employees to be reimbursed for the extra costs of working from home, and as an easement, there's a fixed amount of £6 per week, £26 per month. That can be paid by the employer. If the employer doesn't wish to pay that, the employee can actually approach HMRC and claim tax relief on the same amount. And HMRC have, again, given a relief and easement that you don't have to claim for just the number of weeks you're working at home. As long as you've worked at home at some point during this year, you can claim for the whole tax year. So quite generous, really, in HMRC terms. And that's worth £62 a year to a basic rate taxpayer, £125 to a higher rate taxpayer. £6 not a limit. If you believe you've incurred higher costs, you can put in a detailed claim to HMRC. HMRC have also made a relaxation just for this year only for employees to buy office furniture and equipment, again to acknowledge that people are working from home for an extended period. One thing that is very different and hasn't changed at all is around reimbursement of travel costs between home and office. So this is quite a detailed area. It can get quite messy, but in essence, if you are working in an office, you're now working at home, it's unlikely that you would get travel to go back to your previous office. If you were just going back in for a day to start with, it's likely that's still going to be treated as your permanent workplace. You've only been working at home as a temporary period for COVID. If you do have employees that are working from home, we would recommend a robust policy to your expenses, probably an appendix I would recommend, so that it's easily removed at a later date. but basically just setting out what can and can't be claimed and what circumstances. Next slide, please. And next slide, please. Finally, termination payments. So just thinking about CJRS and how employment and employees' working patterns may change and unfortunately may result in redundancy. Just to point out that there has been a lot of changes with termination payments. So when you're making somebody redundant or terminating their employment for any reason, it's important to separate the elements of what you're paying them. So the first element is known as post-employment notice pay, PEMP. It's basically what was known as pile-on. And the change from April 18 was to ensure that all these payments are taxed and subjected to national insurance in full. So before this, if you had contractual pile-on, it was taxable. If you didn't, it was generally not. It basically aligns everything to make it taxable and subject to national insurance. And then whatever's left is still in the realms of compensation. So compensation for loss of office, ex gratia, and that still sits within the traditional £30,000 limit. And if you exceed £30,000, then there's tax on that excess. Next slide, please. And then the most recent change from April 2020 is that for any amounts over £30,000, not only just subject to tax now, but also subject to employers' national insurance. That's charged as Class 1A national insurance, although it's payable through the payroll. So two major changes there to consider if you are making any employee redundant or terminating their employment. Next slide, please. So I'm going to hand over now to my colleague Robin, who's going to talk to you about the changes that are coming into the provision of living accommodation. Thank you.
Thanks, Andy. Can we have the next slide, please? For the next 50 minutes or so, what I'd like to do is to look at tax and living accommodation, and in particular, the reasons for some of the changes, recap on some of the current rules for taxation and exemptions, changes to taxation of accommodation from 6th of April next year in relation to representative occupation, look at some of the tax effects that the changes will have on employees and employers, and also just give you the benefit of some of our recent experience in this whole area. Next slide, please. The government's view of living accommodation is that the current rules are complex, unfair, difficult to administer and outdated, hence the need for some change. Next slide, please. Their view is that the rules have been in place for a long time. They're no longer fit for purpose. They're difficult to interpret, difficult to apply, and can yield widely unfair results. Certainly in a situation where you have, say, two pretty much identical houses, you can have an extremely wide variation in the level of benefit and therefore the level of tax that's charged. This is an area that is on the list of the revenues for simplification and updating, and they also want to look at some reclassification of some of the other areas that they think is needed. Next slide, please. For boarding schools, the revenue have a list of posts where they normally accept that exemption for accommodation benefits apply, and I've listed them here, but it's really in relation to the other staff where there are always issues and where you need to make sure that the exemption does apply where you're providing accommodation. Next slide, please. Looking, just a quick reminder of the current exemptions that we have. There are two statutory exemptions there, one for the proper performance of the duties, another for the better performance, where it's customary for accommodation to be provided, and that's the one that applies in relation to boarding schools. There is a third statutory exemption, but we don't come across that very often. It's to do with security, so we're not even going to consider it here. And the third exemption I mentioned there is a concessional exemption for representative occupation, which is an old exemption, and we'll look at that in a little bit more detail. Next slide, please. These are the requirements for the proper performance of the employment and what HMRC expect to see in terms of evidence when they're looking at these sorts of cases. In terms of groundsmen and caretakers, groundsmen are not specifically included in the revenues list where they would accept this automatically, but given that groundsmen usually live on site, they have to be available pretty much 24/7, and they're responsible for the security and any other issues that arise inside and outside of normal school hours. Our view is that they would be pretty much akin to greenkeepers living on the premises, which is a category that the revenue do accept automatically as qualifying for the exemption. Next slide, please. This is what the revenue look at when they're reviewing the exemption for better performance and customary. Where employees are involved in emergency call-outs and where they're involved in cover for other roles within the schools. And as explained, the revenue do accept the roles that I've shown there as qualifying automatically. And again, the issue really is what do we do about the other staff that we provide accommodation for? Next slide, please. HMRC's view is fairly clear that it's not the convenience of the employee being able to get to work that determines whether the exemption can apply. They reckon that has no bearing on securing that exemption. The justification is that they say many people start work early or work late, and that doesn't indicate that accommodation is necessary. So what we need to consider is why the employee needs to be provided with accommodation, and you have to be able to show that the employee needs to live there or somewhere very near to that site. We know that the revenue's view has hardened over the last few years on this, certainly with more challenges, and they're being much more particular about when they do or don't agree that the exemption can apply. So it is important that you make sure that you've got plenty of evidence to support the exemption when you're claiming it. Next slide, please. For other categories of staff, this is the sort of the grey area. These can be exempt where they have either pastoral care responsibilities or where they're involved in after school activities outside normal school hours. Normal school hours is whatever your definition of normal school hours is. The additional duties must be included in the contract of employment though, and if not, they should be supported in a side document that sets out what those duties are. And if you haven't got anything like that to hand, then I suggest it would be a good idea to make sure that you review that and put something in place. One of the problems with this area is that the revenue don't publish details of what they consider satisfies the additional duties that need to be undertaken. But our experience is that if individuals have 2 or 3 normal weekly out of hours duties each term, that will be sufficient to satisfy the revenue. Or if you've got a combination of, say, fewer weekly duties but weekend duties included, or additional cover for, say, housemasters or mistresses, or emergency cover for other reasons, then that all goes towards helping secure the the exemption, but it is really something that you need to look at on an individual basis. Next slide, please. Now, this is the area, representative occupier status is the area that the revenue are about to withdraw next April, and this has been a very useful exemption because it wasn't such a tough test to satisfy when it applied pre-1977 when the statutory exemptions were introduced. The test's definitely easier to satisfy, and the revenue accepted that as long as the duties and the nature of the role didn't change over the years, that exemption would remain, and the exemption actually follows the role, so that anybody that succeeds to a particular role that's been covered by this exemption will continue to be regarded as exempt up until April 2021. So because the revenue are withdrawing this now, it's vital that if you've had roles covered by the exemption, that you review this now to ensure that when you provide accommodation, that it would still qualify under one of the statutory exemptions. One of the issues that we found is that not all schools have been certain as to whether they've been using this exemption or not. So it's doubly important that this area is reviewed. Next slide, please. In terms of other ancillary services that are provided and paid for by the school or reimbursed to the staff, even where the accommodation is exempt, these ancillary services always result in a benefited kind that's taxable on the individual. So it is important that these aren't overlooked when you're preparing P11Ds or looking at the PSAs. Clearly, if the employee suffers the cost of those services, there won't be a taxable benefit, but it still needs to be reviewed and reported on the P11D or PSA. The next slide, please. Where the revenue introduced future changes to taxation of accommodation, including the withdrawal of the representative occupier exemption from next April, they will have an effect on both the employer and the employee. In terms of the employee, the exemption is likely to bring the individual into the charge tax for the accommodation benefit. And if the revenue decide to change how they calculate the benefited kind to something like a market rental value instead of based on the cost or a market value of the property, then that could dramatically increase the benefit for some individuals. And that cost is actually the individuals, it's not the schools or the employers, it's a personal liability. But where the benefit becomes taxable, there is also a cost to the employer that they will be having to pay additional Class 1A national insurance on those benefits, currently at 13.85%, so could be a significant increase. In addition, with accommodation benefit, you can't include that in a PSA, a pay-as-you-earn settlement agreement. You can include all the ancillary benefits if you want to, but you're not allowed to include the main accommodation benefit. So it will remain a liability of the individual where it's taxable. Next slide, please. In terms of our experience, well, we've been helping many schools over the last probably year or so on some of this, given that the will or the proposals to change some of the legislation on accommodation benefits has been proposed for some time by the revenue. Our experiences show that many schools have been relying on the representative occupation exemption for other staff, but they don't necessarily realise that they are. Quite often we find that what happens is P11Ds are reviewed and dealt with on the basis of what we did last year, but nobody knows why we did it last year or the year before, because they've lost sight of the agreements with the revenue. in relation to day schools, we've seen quite a few exemptions given for headmasters and mistresses, and certainly for caretakers and groundsmen that live on site. And some of these have been included under the representative occupier exemption. So there is a real need there as well to review those circumstances to make sure that they would qualify under the statutory exemptions. Our reviews are also highlighting lack of additional out-of-hours duties for some staff, where exemption has been claimed, and it's essential really that you have the evidence to back up the reason for those exemptions in those circumstances. Concerns over historical documents or agreements really is that basically they get lost in the archives, so nobody is quite sure what agreements were made and whether they still hold true, or whether the facts on which they were decided with the revenue still apply. So another reason for either trying to find those or to review to make sure that you're still compliant. One of the biggest issues we find when we try to determine what the level of benefits could be, particularly with withdrawal of representative occupier, is that employers don't have records of the cost or cost of improvements of the properties they're providing. And this is important because it can dramatically affect currently the level of benefits that might be accessible for individuals. I mentioned the dealing with the ancillary benefits already. And finally, really, that last point is just a point to say that often we're asked to review the tax issues with accommodation when schools are reviewing their housing policies as a whole, not necessarily just for tax purposes. Next slide, please. Even if the rules change in future, it's still likely that accommodation will be a cost-effective benefit for most employees, obviously subject to the revenue not being too greedy in terms of how they want to calculate the benefit in future. This is a bit of a hot topic for the revenue, but current thinking is that it's still on the too hard pile because of all the complexities and the difficulties in trying to come up with a system that is going to be fair to everyone. We don't have any knowledge of any imminent changes, but you can be assured that the revenue will be looking at this, and they will be introducing some changes, fairly significant changes, I guess, sometime over the next couple of years. Next slide, please. What I've done is listed here some areas that you may wish to look at where there are changes to the way that accommodation is taxed, and particularly currently where representative occupier is being withdrawn. Next slide, please. And here I've provided a list of areas to consider an action that you need to take or might need to review in relation to accommodation and tax issues. The most pressing, obviously, is the review of the effects of withdrawal of the representative occupation exemption in April, where I would really advise you to undertake that review as soon as possible, and particularly where there are likely to be issues or where you won't be able to secure the exemption under one of the statutory terms, is to make sure that you're engaging with employees that are likely to be affected with this. That's a very quick run through, and now I'm going to hand back to Chrissy. Thanks.
Thank you very much, Robin, and thank you also to Andy for that very in-depth, brilliant oversight. We've got some time for questions, and by the miracle of technology, I'm hoping that all of the speakers, there we are, they're all coming back to me. I was going to ask Caroline the first question, but I can't see her. Oh, yes, she's there. Caroline, right back at the start. First question for you. Do we need to determine status for every agency worker, or can we group types of agency workers?
That's a really good question. And the interaction of IR35 and the agency legislation is really complicated. So you need to look at it on a case-by-case basis. But very broadly speaking, if, let's say we're talking about cleaning staff or catering staff who are provided by an agency, typically the agency is going to be paying them subject to PAYE and national insurance anyway. And you need to work out, is there an personal services intermediary between the agency and the worker? So for the vast majority of your agency provided staff, it'll be you, agency employing worker. So you're not in the sort of chain where IR35 applies. So you need to check that. That's probably the case. If that isn't the case and it's agency worker, you then say, well, does the worker have a controlling interest or a 5% interest at least in the agency? Again, the answer is probably no. So again, IR35 won't apply. So you need to understand what's the relationship between the agency and the worker. In all likelihood, it'll be outside IR35, so you don't need to worry about it. But that's the question to ask.
Great, thank you very much, Caroline, for that. The next question, I think this might be for you, Ollie. Is there any update on the MENCAP case, which we didn't mention today, about overnight working or not working, hopefully? That's the question. Ollie?
Yeah, no, didn't mention it really because there is no updates. We're waiting still for the judgment to be handed down by the Supreme Court. The case was heard at the Supreme Court back in February, still haven't had the judgment. So we expect that imminently. And again, that's going to be another case that's going to have potentially big implications for schools, particularly boarding schools. So we'll let you know as and when we hear further.
Thanks, Ollie. Yeah, we'll keep you posted. Next question from Neil, one for you, I think, Rach, to start with. Does the furlough period have to be for at least 3 weeks? And can we furlough people who have not been furloughed before?
No and no. There's no time limit now. So it used to obviously be the 3-week period, but there is no time limit now. Although any claim that you make through the portal, and Andy can correct me if I'm wrong, will need to be for a minimum period of, I think it's a week, unless obviously you're claiming at the end of a month or for a period at the beginning of the month. And in terms of, I think Andy might have even answered the question during his section, but no, you don't have to have furloughed before. So neither the employer nor the employee needs to have previously used the scheme.
Thanks, Rachel. There's a follow-up question from Zena. Will all organisations' furlough claim amounts be published? Rach, do you want to take that? Or?
Yeah, yes. Most companies will be, details from most companies will be published. I think there is an exception. They've talked about not publishing the names of employers that can show that the publication would expose employees or anyone to serious risk of violence or intimidation. But you'd obviously have to show evidence to demonstrate that. So generally, yes, but there is this exception.
And is it only, I don't know, Andy, is it only from a certain period? My understanding it was from December, or it wasn't previously, or Rachel starting there. Is it only from December, so the previous bit doesn't count? Is there, if I misread that?
From the 1st of December, I think. Andy, I don't know whether you want to add anything.
No, I totally agree. Yeah, it's from 1st December, so nothing retrospective.
Thank you both. Back to you, Ollie, holiday pay. How far back could an employee claim if the Harpur Brazel decision is upheld?
Well, there's a 2-year backstop that applies currently. So in terms of calculating your potential liability, I would use that as a reference point, the previous 2 years. Question whether that itself could be subject to a challenge, but that's what we have in legislation at the moment. So it's that 2-year period. Thanks,
Ollie. Whizzing through the questions here, determined to get through them. Question from Ali. If an employee takes holiday whilst on furlough, can you still claim 80% from the CJRS scheme? Rach, Andy, who wants that one?
I'll take it. Yes is the answer. All I would add to that is the point that Rachel made about the Christmas period, that a lot of employers have been clearly asking ourselves and Rachel. So just to be careful about not trying to manipulate the scheme, shall we say.
Thanks, Andy. And a question probably for you, Andy, I think. How do you make an adjustment for a prior claim now? I think that's the claim under CJRS. How do you make that adjustment?
Okay, so it depends on whether you're looking to adjust upwards or downwards. So if it's that you've underclaimed and it goes back into the version 1 scheme, so pre-November, then you need to contact HMRC directly. If you've overclaimed, then you can correct that by reducing your next claim or next claims. There is a box in the portal where you can actually put in an amount that you want to effectively deduct. So you deduct it from future claims.
Super, thank you very much, Andy. There's a few other questions, but I'm aware that it is just 3:30. We will follow up any questions that we haven't answered. We will send a follow-up note afterwards to everyone that's come along today. So we will answer those questions. So it just turns to me to say thank you very much, everyone, for coming along, from all of us at HCR and from Crow. Thank you for your engagement and questions and involvement. Our next webinar is in the spring. We're running an event with Agbis. Please spread the word. In the meantime, hopefully this is our last education webinar before Christmas, unless something happens and the government change anything between now and then, who knows. So I'd like to take this opportunity to wish you an uneventful end of term and very best wishes for the Christmas break when it comes. And we look forward to seeing you in 2021. Thank you for joining us.